Hey everybody, good morning. Lee Lowell here, smartoptionseller.com. Today is Saturday, May 30th, 2020. Welcome to another edition of your Saturday Synopsis, where I go over the charts, see what happened in the markets in the prior week, and see what may happen moving forward to the new week. And in addition to that, I give you some options information. As many of you know, I've been in the options trading business for about 30 years now. So I like to impart some options education onto all of you, tell you some things that I've been seeing, and today I want to give you some ideas on how to use a cool little tool to help predict future stock movements and to help in your options trading as well. So let's start our Saturday synopsis by looking at the charts and see what happened over the prior week. As you can see in front of you, this may be looking familiar to you. We look at how the S&P 500 has done over the prior week. And by doing that, we look at the SPY, which is the S&P 500 exchange traded fund. It's a proxy for the S&P 500, very easy to trade. So what is the S&P 500 or the SPY? What has it done over the last week? Well, as we always look at the charts, the past few weeks, we've been keying in on this 200-day moving average right here, this 200-day moving average. And I've been saying that it had resistance right at the $300 level. And the market had been gunning for that level, had been gunning to get to that 300 level and wanted most likely to pop through it. I thought there would be some resistance there and it may turn the market back. But obviously this past week, the market blew right through that 200-day moving average, popped above it, got up to a high of about 306, almost $307 for the SPY, right at the top here of this bar. Each one of these black lines is 1 day's worth of trading, and I can always move the chart out a little bit so you can see each line here is 1 day's worth of trading. A little tick on the left is the opening price, the high is the top of the bar, the low is the low of the day, and the little tick on the right is where the market closed. So obviously, we had a good week. The market blasted right through the 200-day moving average. So usually what happens in that case is once a support level or a resistance level in this case has been breached, it now becomes seen as a support level. So now the $300 level is now seen as support. So that should hold anytime it gets tested now, the 300 level. There are probably buyers who are going to come in and start driving the market higher. So we've seen some good action this week. The market just blew right through the 200-day moving average at $300, and now it's trading above it. So what does that mean for next week? Most likely, it's probably going to keep moving higher. We've cleared that resistance, and now it becomes support. Buyers are out there. They want to get back in. There's a lot of money on the sidelines. A lot of people got out of the market down here in the lows, which is unfortunate. And now they're having FOMO, fear of missing out. They don't want to miss any more of the movement. So all this money that's been sitting on the sidelines is now starting to get back into the market, and it'll probably keep pushing things higher. Here in the U.S., government is basically backstopping everything, pumping trillions of dollars into the market. So we know we have that as a support system here in the U.S. Even though unemployment is over 40 million people in the last month and a half, 2 months now, the government is there to help prop up the stock market, and that's what's been happening. And other governments around the world are doing the same thing. And we're at the end of the Q1 earnings season pretty much. There really hasn't been many disasters. Q2 earnings could be a little different because they'll show the full brunt of the coronavirus. And so we'll have to see how businesses have fared after the Q2 earnings start coming out in July sometime. So for now, the market just wants to keep going higher. Look how powerful the move has been. And it's busted through the 200-day moving average, which is really a line in the sand for a lot of people. So now it becomes support. So the path of least resistance right now is higher. The market is going to be gunning for all-time highs now. Now, this is just the S&P 500. If we look at the NASDAQ, which has been extremely strong, look at it. Finished Friday right here, just a little below 9,500. Here's NASDAQ all-time highs. I mean, we're just not that far from it. I could see that happening pretty soon, taking up the all-time highs. It's just been an incredible V-shaped rally. The Dow Industrials, not as strong. Let's take a look at how the Dow has done. Still has not breached its 200-day moving average. So obviously for the Dow, they're going to be gunning for that 200-day moving average level, which is 26,295 or so. May even see it this week. So everything's looking strong. The market wants to go up. There's bids under prices. People on the sidelines want to get back in. Governments are stepping up. So the path of least resistance is higher. I've been a non-believer of this rally only because I think there's just been too much unemployment. Businesses are failing. I mean, how can you argue with that and have higher stock prices at the same time? But as I've been saying, you have to trade what the market is showing you, not what you think it's going to do. And obviously the market is showing us that it wants to go higher. And most likely it will continue to go higher. So that's what I see happening for the week ahead and what's happened this past week. Market looks strong. You don't want to fight it. Don't fight the trend. Don't fight the Fed, as they say here in the US. So go with the path of least resistance, which is typically higher. Now, as far as our options education for today, I wanted to give you an idea of how to help you possibly make smarter options trades. Typically, when you're an option investor, you have to know where the underlying stock is going to move to. There's really no way for you to profit unless you have an idea of where the stock is going to move to, yeah? So whether you're an option buyer or an option seller, and we are option sellers, I'm an option seller, I run option selling newsletters, you still have to have an idea of where the stock is going to move to within a certain period of time, because all options contracts have expiration dates. So you need to have an idea of whether the stock can get to where you want it to go to in the time allotted. And a lot of beginning option players just don't know that. They don't understand how probability plays a huge part in the profitability of your options trade. So you need to know what the probabilities are of a stock moving from point A to point B. Well, can you actually do that? Yes, you absolutely can. And let me show you how you do that. One of the stocks that I love to trade is Walt Disney, right? Walt Disney, great company. We all know Disney. And let's bring up the chart of Disney here. Walt Disney, daily chart of Disney on Friday closed at $117.30 a share. It's actually had a nice move off the lows. So if I want to get long some shares of Disney, I can engage in option trading strategy by selling put options on Disney. And I can choose a price for Disney that I'd like to potentially buy the shares of stock. And by doing so, I can accomplish that by selling a put option. I can sell a put option at a strike price for shares of Disney that I'd be willing to buy them for. And at the same time, I'm going to get paid for my obligation. Well, with Disney at $117.30, you know what I'm looking to do? I'm looking to potentially buy Disney all the way down here around $45 a share. Okay, that's well over $70 lower than where Disney currently trades. Well, how can I buy Disney at $45 when it's currently trading at $117? Well, I can't, but I can put in my obligation to do so, and someone will pay me for my obligation. Well, how much will someone pay me? Well, we have to look at the options chains to figure out how to do that. Here's an option chain for Disney in the October 2020 expiration date. Here's the put options on the right, call options on the left. Here's the $45 strike for Walt Disney. October 45 puts, 20-cent bid at 29-cent ask. That's how it went out on Friday. I can sell these put options somewhere in between the bid ask for about 25 cents a contract. Well, what does that mean if I do that trade? Well, I'm putting in an obligation to buy 100 shares of Disney at $45 a share, and someone who's going to pay me $25 for my obligation. So if Disney happens to fall from $117 all the way down to $45 by October, then I'll be called upon to fulfill my obligation and buy shares at $45, which is fine for me because I would love to buy Disney at $45. Now, just as a disclaimer, this is not an actual trade. I'm not making a real trade recommendation here, so don't take this to heart. I'm just showing you examples. But the thing is, what are the chances of Disney falling from $117 all the way down to $45 by October? Well, here's a cool little tool to help you figure that out. It's called a probability calculator. Okay? Now let's go to the probability calculator. Here's what it looks like right here. So if we want to know the chances of Disney falling from $117 all the way down to $45 by October, can we figure that out? And yes, you absolutely can by using a probability calculator. Now at the top of the probability calculator is the input section. You have to put a few numbers in here, and down here it'll tell you the chances of Disney falling down to $45. Now at the top, it's a stock. It's $117 a share. The expiration date is October 17, 2020, which is 140 days in the future. And the future volatility number is something I'm going to show you how to figure out. Now what we do is we put in our target of $45 in each one of these boxes here. And once I click on go, you're going to see the chances of Disney falling that far. Hit go, and there you go. Down here in the bottom left says finishing below lowest target, which is basically 0%. Finishing above highest target is just about 100% probability. So what that's telling me is that Disney in the next 140 days has about 100% probability of staying above $45. And why is that important? Because that's telling me that there's absolutely no chance that Disney will fall down to $45 by October. And I sell these put options and people pay me money. So it's almost like guaranteed money that I get to keep for engaging in that trade. And if Disney does fall that far, well, then I get to buy shares at my price of $45. Now, some of you have always asked me, what's this future volatility number? How do I find that volatility number? Let me give you another good resource for that. What you can do is go to ivolatility.com. I've talked about ivolatility.com before. It's a great website, free stuff to give you all the volatility information you may need. Now here I've typed in Disney and it gives you all this historical and implied volatility. And all you have to do is figure out the number to put in the probability calculator. The best way of doing that is click on the volatility chart down here. Click on it, brings up a new page. And it brings you to this chart. This is a volatility chart of Disney. It's not a price chart. It's a volatility chart. And you can see when the coronavirus struck, volatility just went skyrocketing along with every other stock. So you've got an implied volatility chart, a line, and historical volatility chart. And that just tells you how erratic the Disney stock itself has been. So the numbers here, it's around 40%. Okay, so you look back at the chart over a year, and you kind of see where volatility is, but you want to use current numbers, which is right around 40%. So you go back to your volatility, you go back to your probability calculator, you put 40% in this future volatility box, and that's how you figure it out. All these other numbers, you know what they are ahead of time. The only one you have to figure out is the future volatility number. So you go to iVolatility, look at the charts, put it in here. So now Disney has really no chance of falling from 117 down to $45. So I sell the put options, make my money. And if Disney does fall that far, well, good for me. Then I get to buy shares of Disney. But you can sell these put options, collect the money, and have an idea of whether the stock will move from point A to point B. So having a probability calculator is a great way for you to get a gauge of whether the stock has a chance of moving from point A to point B. And that will help your profitability over time. Okay, so you use these tools, use a probability calculator, go to ivolatility.com to find your future volatility numbers, great resources. Also, back on our website, smartoptionseller.com, go back to my blog, just click on blog and go to the December 5th, 2017 blog post, Your Crystal Ball to Future Stock Prices. I talk about more about the probability calculator and why probability is so important, and I show another example of the calculator. So check on that. Also on our website, smartoptionseller.com. Don't forget to download your free put selling basics guide. It'll tell you all about put selling, why we love put selling, and why it's such a great strategy. And once again, you can always go to our services tab, read about the 2 newsletters that we run, and also about our one-on-one coaching. I talk to my students about probability all the time. We look at the probability calculators. So that's all for me today. I hope this has been valuable to you. If you got some, if this has been good for you, give me a thumbs up on the YouTube page, and don't forget to subscribe to my channel. That's all for me. Lee Lowell signing off.